let's jump into the creation of short portfolio. But before we start jumping into it, you need to understand what typically a portfolio should consist of. We talked about the active and passive income sources, right? It's not one size kind of fitting everybody, right? So it doesn't. Now again, you choose what best works for you. Typically, if you are now, since we're getting into the zone of creating financial assets, we've done the digital assets, now we're getting into financial assets, right? So get that hat on now. So with the financial assets, there could be current and non-current, right? That's how the industry defines them. And for a simplicity's sake, current assets are the one which give you quick liquidatable compensations against that asset, okay? Like a short trade, right? Or something that you built one time, sold it and got something out of it. Clear? So, or a fixed deposit, right? You can go to the bank and say, I want my money back. As simple as that. So that's a current kind of a financial asset. A non-current asset is something that is not easily liquidatable and is done over a period of time. That means it can give you a return over a period of time, right? A real estate, for example, right? You might buy some real estate, you might keep it for some time, right? Because it doesn't make sense to churn unless, of course, you are kind of going about flipping real estate. That's a different way of looking at things. But real estate from an asset perspective, okay, not from a business criteria perspective, but from an asset perspective, is used to create cash flow in form of rental income and, you know, leasing it out and so on and so forth. We talked about the same for the machinery and all that. So non-current assets like bonds and this and the other, so they become the area which is liquidatable over a period of time, and you want to take the advantage of them when they are with you. So those are the ones that can be classified accordingly. Now with this basic understanding, there are certain key financial assets, right, which formulate a portfolio. Some of them are the businesses, right, that you create your businesses. They result into some gained profit and income that comes your way, okay. We will discuss more details on how you can do that in RISE 5, okay, with how you diversify, if you remember, that's part of the RISE Up program. Then there is stocks, right? We'll discuss those in detail to create portfolio because we discussed this in the money spin program, money spin strategy, for example. Then we will talk about mutual funds, the selection of mutual funds, right? Specifically in what goes into them, so that you get a broader view. You can then choose to do it yourself. I do it myself, all right? I do it myself. But I was doing it myself for some time, then I outsourced because that became mechanical for me and I knew the exact criteria, and then I outsourced by constantly monitoring over a phone call what's happening, right, and checking my online kind of membership, that what's happening to my portfolio, and with that I put the precautionary measures and your seasonal changes if required. So that's mutual fund or ETFs to that extent. And then there's commodities and bonds. Now I deal in commodities, but we are not covering it over here because commodities again require some specialized knowledge. We will do this as part of the RISE circle growth. Okay, so people who understand these basics are now showing passion and interest and then coming to the RISE circles in a very informed fashion. There, the remaining lot, which is the filtered lot, I'm sure most of you should be there, but the criteria here is because commodities have to be understood and also understood from a liability perspective, right? What goes into this. So it's more risk prone, right? I've been all right with it because I've done some certifications and so on and so forth. So we'll come to that at the right time. With that said, there are bonds. These are again long-term portfolio items. I have some of those, right? But I largely keep myself a little more liquid than this because there's a time period and so on and so forth. So bonds for me are more of a mitigation of sorts, not for growth perspective. I will do that during my retiring activities. Okay. With that said, the other portfolios we discussed this earlier, and I'm just reiterating them: real estate, precious metal, cash, fixed deposit, loans and receivables, and then of course the okay, somehow I can't see what I'm written there, but they should consist of give me a minute. Okay, I'm sorry about that. So cash and non-cash, rather cash and cash equivalents, right? Typically your gratuity or your funds, that is, your employee funds or your ESOPs, etc., come into that criteria, okay, which you can liquidate at the right times. So that is what is missing because it's getting covered by the strip from the the recordings. Okay, so that's funds and gratuity. These are cash and cash equivalents. Okay, and there are many other items in that as well. So with that, let's jump into the next one where we go through the creation of short-term portfolio. Okay, and I'll see you there.